Hi, this is Michael Jones, Chairman and CEO of Caravel Concepts. Welcome to Market Insights, our weekly analysis of current events and their potential impact on financial markets. Let's get started. Financial markets have been under downward pressure in the run-up to the election as COVID-19 cases rise and hopes for a pre-election stimulus package fall. That means that we're going to have to ride through the election results without the support for asset prices that we might have hoped for through newly printed dollars from the Federal Reserve pouring into financial markets. That could be a problem because this election is going to be very difficult to predict. Early voting turnout suggests that we could see record turnout for the last 100 years. Depending upon who exactly these new voters are, we could see very different election results. Polls may not be accurate because they are based on prior turnout levels. The new turnout upends everyone's polling models. So, we think investors should prepare for 4 different election outcomes and the resulting market reaction. The most problematic election outcome, and the one we've talked about in the past, is a contested election. In a contested election, we could see several weeks, hopefully not more than that, of political uncertainty. That could push any COVID-19 stimulus package out into 2021. Also, the acrimony, the potential for unrest in a contested environment could cause financial markets to pull back as much as 10%, or to around 3,000 on the S&P 500. Now, we do believe that kind of pullback in a contested election scenario would ultimately represent a buying opportunity because we firmly believe any contested election will be resolved peacefully and ultimately one of the other 3 scenarios will play out. What are those other 3 potential scenarios? Well, we think there's the possibility for a Biden split ticket. We think there's a possibility for a status quo where nothing really changes. And we think there's a possibility for a blue wave where Democrats take over everything. Different market reactions from each of these different scenarios. In the Biden split ticket, where he wins the presidency but Republicans hang on to the Senate, that could be the best of all worlds for investors. A Republican Senate's probably not going to pass Biden's most ambitious tax increases, particularly for corporate America. That means earnings could be stronger than they would otherwise been, and you get the other best combination, a big stimulus package and a lot of money injected into financial markets by the Federal Reserve. In a status quo election, markets could be volatile because President Trump has not been very clear about what he wants to do in his second term. He could support more stimulus. He may turn thumbs down because of the overwhelming opposition among his core supporters for more government spending and more money printing by the Fed. We simply don't know. Markets could remain volatile until we see what he wants to do. And if he decides to turn his thumbs down on stimulus, markets could have some downside until whatever economic policy he does implement proves to be as powerful for financial markets as money printing and fiscal stimulus was for equity markets in 2020. The last outcome, a potential blue wave. Polling data does suggest that this could occur, but as we said before, can you really trust polls when turnout is going to be so unprecedented? In a blue wave, the markets will probably be torn between the hopes for a huge stimulus package with tons of printed money injected in financial markets and fears of what higher taxes might mean for financial markets. So that one is going to be volatile. If President Biden takes the advice of prior wave elections and learns the lesson of those prior wave elections and takes into account the concerns of the opposition, then we may see less dramatic tax increases than people initially feared, and ultimately the money pouring into the financial markets from the Federal Reserve will overwhelm those fears. The big thing we think investors should keep their eye on, no matter what the election outcome, is what is the prospects for another big stimulus package. As we saw in 2020, despite a global pandemic, a global recession, collapsing corporate earnings, if the Federal Reserve prints enough money and injects it into financial markets, stock prices go up, home prices go up. So an election outcome that gets a stimulus package that the Federal Reserve finances with printed money is going to be good for the stock market. An election outcome that delays that stimulus package because of political uncertainty during a contested election, or if we find out that in a new term, President Trump no longer is a believer in what we would call modern monetary theory, lots of money spent by the government, funded by printed money. If he turns his back on that in a second term, then we could have more market volatility. Thanks for tuning in to Market Insights. We hope you found it informative. For more information, please see our latest Strategic Insights publication devoted to the election. You can also find all of our research pieces at caravelconcepts.com or by subscribing at the link below. Thanks.